In this video, we will have a closer look at the two analyses: risk after losing trade per trade and risk after losing trade all trades. The purpose of those analyses is to identify whether there is an increase in risk taken by you in case you had a number of consecutive losses beforehand. This increased risk might be visible in a single trade, for example, by increasing the lot size or having the stop loss further away. The risk may also be based on a couple of open trades simultaneously, each single one having an acceptable risk, however, the combination of those representing a high risk. Excessive risk-taking is probably the most dangerous thing a trader can do. The priority one for trader is to secure their capital and always find a balance in risk and rewards, which enable them to gain in the long term and survive times of losses. Excessive risk-taking in trading is usually paired or even caused by strong negative trading emotions. For example, due to the fact that there have been many consecutive loss trades. Even when knowing that loss trades are as much part of trading as winning trades are, controlling the own emotion during extreme situation is still very difficult. Not being affected by those emotions or accepting the own emotion and stop trading for a while is one of the toughest challenges. Yet, it's super crucial on the path to become a profitable trader in the long term. It is important to keep a clear and rational mind during loss trade. A good example for this is oftentimes seen at the roulette table in a casino. Imagine you're playing roulette and are always betting on red. The likelihood of winning is likely below 50%. Sometimes you're winning, sometimes you're losing. However, there will be times, and I've seen it often enough, that there will be 10, 15 times of black in a row. It is quite unlikely, yes. However, it happens if you're playing long enough. I lost 10 times, 12 times, 15 times. You're saying to yourself that it cannot be. What is the odds of this happening? 15 times black in a row, that is so unlikely. So I decide to go all in. There must be red now. I go all in, I lose, and gain over. After 15 times black, the likelihood of now coming red is still slightly below 50%, just like with any other new round. It doesn't matter how often there was black beforehand, it could have been 1,000 times. Probability does not care about what had happened before. The same applies for your trade. Just because one has lost many trades beforehand, it does not increase the likelihood of winning the next trade. Hence, it does not justify increasing the risk either. The rational decision would be not to increase the risk at that point, although it may be hard to realize it at that point. Many margin calls has happened because of this. You may not have crashed the account the first or second time you had a couple of losses because you were lucky that exactly the high-risk trade was a winner. However, it will certainly happen at one point, because consecutive losses will happen again and again purely based on probability. And if every time the risk is increased, at one point it would turn out badly. To sum up, it is absolutely key to not fall into this behavior, and therefore tracking your own behavior is so important. Now let's take a look at what this chart tells us. In this explanation, we will only look at a chart of risk after losing trade per trade. The functionality of risk after losing trade all open trades is exactly the same, only that all open positions are added up to show the overall maximum risk if all positions hit a stop loss. In the analysis, the risk is derived based on your stop loss, the amount of money you would lose in case the stop loss is hit, dividing the money you lose with the stop loss set by your account balance equals your risk in percentage. In the example, we see that the trader risked roughly 1% of the capital per trade in case he had only 1 or 2 consecutive loss trades beforehand, which seems like a fair amount of risk. However, as soon as there were 3 or more consecutive losses, the trader suddenly starts to increase the risk of the trades, either by increasing the distance to the stop loss or by increasing the lot size. With 6 to 10 consecutive loss trades beforehand, the trader already risked on average 5% per trade, and more than 10 loss trades, already 10%. This behavior is highly dangerous, and when checking your own output, you should watch out for an increasing risk level the more consecutive losses you had. If there is a positive correlation between the number of lost trades and the risk taken, you should reflect on what may cause this behavior for you to happen. There are certain strategy traders oftentimes apply during the situation like this. Some traders may choose to stop trading for a day in case of a specific amount of consecutive loss trades, ensuring that they fight back to a rational decision making. Other traders have a habit of calculating exactly the risk they are taking before every single trade and have a specific risk they would never exceed with a trade. Others actively lower the lot size during consecutive losses. For example, after 3 losses to 50% of their usual lot size, or after 5 trades to 25%. A single trade may not reflect the additional risk. You may also want to check the other charts showing the overall risk based on all open positions. Some traders tend to open many different positions, increasing the risk and limiting the focus on single trade at the same time. Dealing with losses, trading emotions, risk, and etc. is not a comfortable task to do. It is much more fun to optimize the strategy to increase returns. But unfortunately, this is extremely important. However, when mastering your behavior in that kind of situation, you already beat a large share of other traders in the market. By securing your account, you may not fall out of the market due to ongoing margin calls like many other traders do. And you have the opportunity to build long-term profit by optimizing yourself and your trading with every single day in the market. This is a huge opportunity and may be the foundation for a great success in the future.